Our first read of 2022 on how retail sales closed out December. We're expecting a minus number on headline, but it was a great year for retail sales. The monthly numbers are out minus 1.9%. That's about minus 1.8% more than we were expecting. And if you look at X autos, it's still under pressure, more pressure, minus 2.3%. Strip out auto sales and gas sales, minus 2.5%. These are big numbers down. And if you look at the retail sales control group plugged into higher economic data points, that's minus 3.1%. That is huge. Now, I do warn, okay, that these are big year-ending negative numbers. But for the year, it's not necessarily about how December was. It's how many shoppers, of course, spent money earlier in the year. If you look at March, for example, of last year, big, strong gains. So, yes, we ended with a whimper, but overall, it was really how they spaced out sales and how many consumers, of course, heeded supply chain issues and shopped early. Now, if we consider that retail sales is not adjusted for inflation, that really makes these eye-opening numbers, at least for December. Now let's switch gears. Import-export prices for the month of December. Import prices, we're expecting up 0.2. Once again, exact opposite, down 0.2. But in this instance, any moderation isn't a bad thing. But do remember, China had record exports last year. They're going somewhere. If you look at import prices, ex-petroleum, different story, up 0.3. Finally, the year-over-year number. This is important. Year-over-year, 10.4. Last look was 11.7, which was the highest level in 10 years. So we have moderated a bit there. And if you look at export prices month over month, down 1.8%. That is much worse than the up couple of tenths we were expecting. And finally, year-over-year export prices last month were up 18.2%. That was the highest read ever going back to 1984. We moderated to 14.7%. Now, if that's a low number, it just goes to show you, how do you make 14.7% look good? You start out at 18.2%. There's going to be a lot of inflation reads that are going to start to moderate in various forms. But the kicker is some of the really lasting, durable inflation levels throughout the economy, whether it's rents or labor costs or food costs, some of these are going to be much stickier, and that's a key issue. Interest rates, well, we closed right on top of key support, yield support yesterday, around 1.70% or so. We have climbed up a bit. Now we're coming back down. If this week has any surprises, it's that we had hot inflation reads and interest rates are actually down for the week. How do I know that? Because last Friday's 1.76% yield close for 10s. Well, that was a 2-year plus high.